Hey, John Higgins, Mortgage One. Happy New Year and happy Tuesday. So, wanted to give a little kind of a setup for maybe 2023. So, we've come out of a kind of a crazy year last year, and I wanted to run through some charts and kind of give you some information. Some is good, some kind of looks troubling, but overall, I think for 2023, we're going to look at a much better market than we're ending 2022 with. There's a lot of reasons to be optimistic, and we're going to jump into a few charts and kind of show you where we came from and maybe where we're headed, and I think better days are ahead. So I wanted to show you just a couple charts that will give you kind of some perspective of where we've been and then kind of where we're headed. So we know that inflation was the number one enemy of mortgage interest rates, and that had a huge impact on our real estate market. So as you can see on the chart on the left, we're back down to 7.1% on the headline number when we exclude food and energy, which is a volatile part of that component or composite, and we're at 6%. So, numbers are getting better. If we look at the chart on the right, you can see a year ago, we're basically where we're at today at 7%, but boy, did it get ugly in the middle of the year with a 9.1 read on the headline number for inflation. The good news is, the trend is great. So we're starting to see kind of inflation rolling over. Obviously, all those Fed increases has had a huge impact on the inflation front. And I think, we're going to break below 7 on the headline number here shortly and below 6 on the core rate. And that's going to be more good news for interest rates. So, what does that do for our market as we head into 2023? Well, here's a couple charts that will give you an indication of kind of, where we've been, some good things to look for in the future as we head into 2023 here. So on the top left, you can see that purchase demand and mortgage interest rates, they're basically lockstep as far as being inverted. So as our rates started to peak, boy, did it really suck the demand out of the marketplace. We have seen interest rates roll back a little bit. And as we can see in the graph here, we are seeing a tick up in purchase demand. So that is good news. And we think that that's going to continue into 2023. One of the big factors in where are buyers and sellers going to come from? Well, in the top right-hand corner, we've got a chart that shows this yellow line is basically the median purchase principal and interest. And as that peaked, we saw, purchase demand just evaporate. So that goes back to an affordability issue. But as interest rates start to come down and the MBA, which is the Mortgage Bankers Association, they're forecasting that, rates are going to come down. And with that, we get a nice rollback in affordability and the median purchase principal and interest. So, lots of good things to come from the lower rates that we're hoping to see through 2023, at least compared to last year. So when we look at, where is the market today, as we head into 2023, you can see in the lower left, we're going to basically hit an annualized rate of about 4 million sales. That is well off the peak that we saw really coming into this year that was at 6.5. So we had this great run, lots and lots of demand. That has evaporated and is headed lower here for the interim. There's some seasonality, obviously, with the time of the year that we're in, but these higher interest rates have really been a reason for the purchase market to really hemorrhage here. When you couple this lower sales number, where are we going to get buyers? Where are we going to get sellers to come together to make a deal? There are some troubling signs. So if you look at the lower right-hand corner, we're going to end the year at around 1 million units that are listed right now as far as homes for sale. These are numbers that we haven't seen before in a long, long time. So I think the higher interest rates have obviously driven us to these lower levels of people unwilling to list their homes. That makes it tougher for buyers. But as interest rates start to moderate, we think that there's going to be more inventory come to market. There are going to be some buyers out there, obviously, coming out with rates that are a little more attractive than the 7.5 we saw in the middle of the year. So, more good things to come, I think, in 2023. We're going to see interest rates kind of reshuffle the deck here. And if we get lower rates, we should get an uptick in inventory. And we know that the purchase demand will come back from the buy side with those lower rates as well. So as we head into 2023, I just want to let you know I'm going to be sending out an email a little bit later this week. I would love to partner with you on marketing, prospecting, trying to find new buyer and seller leads. I think there's a great opportunity in 2023. The competition is going to be much more fierce. The market is not going to be what we saw in 2020 or 2021, but that doesn't mean we can't make 2023 one of the best years yet. And I would love to partner with you and help you in any way. So have a happy new year. I'll be reaching back and looking forward to working with you.